Welcome to InvestorHubX.com. Few tools in a technical analyst's toolkit have stood the test of time quite like the stochastic oscillator. Its core insight is deceptively simple. In an uptrending market, prices tend to close near their recent highs, while in a downtrending market, prices tend to close near their recent lows. The stochastic oscillator measures this relationship, giving traders a structured and repeatable way to assess momentum and identify potential turning points in the market. In this video, we will cover what is the stochastic oscillator, how to apply the stochastic oscillator on a chart, strategies for using the stochastic oscillator. If you enjoy this video, don't forget to like the video and subscribe to our channel. It helps support the channel and allows us to continue creating more high-quality content. Let's get started. Developed in the late 1950s by George C. Lane, the stochastic oscillator remains one of the most widely used indicators in modern trading, appearing on charts across stocks, Forex, commodities, and cryptocurrency markets. The stochastic oscillator is a momentum indicator used to identify potential overbought and oversold conditions. Unlike trend-following indicators such as moving averages, the stochastic oscillator is considered a leading indicator because it can sometimes signal potential reversals before they fully develop in price, making it useful for identifying possible turning points in the market. There are several ways traders use the stochastic oscillator. The first and most common method is identifying overbought and oversold levels. Here, the 80 level represents the overbought region, and here, the 20 level represents the oversold region. When the stochastic oscillator moves above 80, it suggests price is trading near the upper end of its recent range and may be entering an overbought condition. This could signal that bullish momentum is beginning to weaken and a potential trend reversal may occur. On the other hand, when the stochastic oscillator moves below 20, it suggests price is trading near the lower end of its recent range and may be entering an oversold condition. This could signal that bearish momentum is weakening and a potential reversal to the upside may occur. However, it is important not to use indicators on their own. Always combine the stochastic oscillator with key support and resistance levels, price action, and market structure before entering a trade. The next way to use the stochastic oscillator is called the crossover method. The blue line is called %K, which is the fast line. The orange line is called %D, which is the slow signal line. In an uptrend, the blue %K line is generally above the orange %D line, showing stronger bullish momentum. Once the blue %K line crosses below the orange %D line, this creates a bearish crossover. This signals a potential trend change because buying momentum may be weakening. On the other hand, in a downtrend, the blue %K line is generally below the orange %D line, showing stronger bearish momentum. Similarly, once the blue %K line crosses above the orange %D line, this creates a bullish crossover. This signals a potential trend change because selling momentum may be weakening. However, remember not to rely on indicators alone. Always combine the stochastic oscillator with key support and resistance levels, price action, and market structure before entering a trade. So, how do you apply the stochastic oscillator to your chart? First, head over to the Indicators tab at the top of the chart. Next, type STI into the search bar and select the stochastic oscillator. The indicator will then appear at the bottom of the chart. The blue line represents %K, also known as the fast line. The orange line represents %D, also known as the signal line or slow line. These two lines move between 0 and 100, helping traders identify momentum shifts and potential overbought or oversold conditions. Now that we understand what the stochastic oscillator is, let's explore some strategies for applying it. One of the main ways we teach using the stochastic oscillator is to combine it with divergence. There are two main types of divergence: bullish divergence, bearish divergence. Let's start with bullish divergence. When price is making a lower low, but the stochastic oscillator is making a higher low, this suggests that bearish momentum may be weakening. Although price continues moving lower, the momentum behind the move is becoming weaker. This could signal that sellers are losing strength, and a potential reversal to the upside may occur. This is NVIDIA on the daily time frame. Here you can see that price is making a lower low, while the stochastic oscillator is making a higher low. This is known as bullish divergence. It suggests that selling momentum may be weakening. Although price continues moving lower, the momentum behind the move is becoming weaker. However, we cannot enter a trade based on divergence alone. We first need additional confirmation that the market may be changing direction. How do we do that? One way is by drawing a trend line like this. When price breaks above the trend line, it provides additional confirmation that the downtrend may be losing strength and a potential trend reversal could be developing. This increases the probability of a higher quality trading setup. Apart from divergence, another signal we can use is the crossover between the blue and orange lines. Here, the blue %K line crosses above the orange %D line, while the stochastic oscillator is below the 20 level. This suggests that selling momentum may be weakening, and that momentum could be shifting back toward the buyers. When this occurs together with bullish divergence, it provides additional confirmation that a potential trend reversal may be developing. This increases the probability that the market could potentially change from a downtrend to an uptrend. Next is the bearish divergence. When price is making a higher high, but the stochastic oscillator is making a lower high, this suggests that bullish momentum may be weakening. Although price continues moving higher, the momentum behind the move is becoming weaker. This could signal that buyers are losing strength, and a potential reversal to the downside may occur. Now let's look at an example. This is Solana on the daily time frame. Here we can see a bearish divergence. Price is making a higher high, while the stochastic oscillator is making a lower high. This suggests that momentum in the uptrend may be weakening. Although price continues moving higher, the strength behind the move is beginning to fade. We can also see that the stochastic oscillator is above the 80 level, and the blue %K line crosses below the orange %D line. This further strengthens the case that the trend may potentially be shifting from an uptrend to a downtrend. However, this does not mean we immediately jump into a trade. We still need confirmation that the market structure may be changing. To do that, we can draw a trend line like this. When price breaks below the trend line, it provides additional confirmation that the uptrend may be weakening. This is where traders may consider looking for a trade setup. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, in this video we learned what the stochastic oscillator is and how to apply it on the chart. We also learned how traders use it to identify potential changes in momentum through overbought and oversold levels, crossovers, and divergence. Remember, no indicator is perfect. Always combine the stochastic oscillator with price action, key levels, and market structure before making trading decisions. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.